Dumelang Bagaetsho. Welcome back to GingerBread Podcast. With the cost of living in Botswana rising, today we're going to look at debt. We're going to deep dive into debts and look at it from different perspectives. I am your host, Walter Bono, and I'm with Vicky Joseph.
Hi guys, I'm back again. Happy New Year. Yeah, we're back at it.
All right. So, Vicky, let's start looking at debts hella generally, right? We'll look at them from different perspective of saying the personal mortgages, all the way to micro lending. I got. What do you think of? What do you think of debts in a place in an economic landscape where it's really not favorable at this time? Yeah.
I feel like debt is an okay thing. There's nothing wrong with debt. I'm for debt. It's there for a reason. The reason why banks have business is because they're saving a certain thing. So people need it. You need debt to advance your life. If you want a car, how long is it going to take you to save up 500,000?
Okay.
So I feel like that is a thing. It should be a thing. It shouldn't be taken to be a bad thing. It's okay. And what is your take?
My take is debt has a lot of bad things that are surrounding it, right? In what sense? We don't know how much. Most of us are not that financially literate, right? So we take more than we can afford, and then as much as we would want to get that car quicker, get that house quicker, we didn't really assess if our cash flow will be able to sustain it, and if this happens, how will we be able to maintain life in general, right? So it comes with a lot of that, and I think we have a majority of people who are really having difficulties with that debt.
So you're not for debt, basically.
Yeah, I wouldn't say. I would say yes. I'm not for debt at this point.
Okay. So let me tell you why. I'm going to be basing everything that I'm going to be saying throughout the show from the statement.
Yeah.
So for me, I feel like, have you ever been on vacation?
Who, me?
Yes.
No, I'm broke. Oh yeah, I'm kidding. But yes,
So
I
when
get
you're
you.
on vacation, you should make every day count. There's never a time or a day where you're just sleeping throughout the day.
Yeah.
Every day has to count.
Yeah.
Right. So I feel like even with life, every day should be like a day on vacation. You never know when your time is up.
Yeah.
So all the time when you're trying to delay your gratification and everything because you're trying to save and everything,
Yeah.
it's you assuming you're going to be living here forever. So I have changed the way I think, and I take it as though every single day I'm on holiday.
Yeah.
So every day should count. And because I communicate with you a lot outside of like everything else, you know that I've like had a mindset shift that actually, what am I doing with my life?
Yeah.
It's because I've changed the way I think. I feel like every single day should count. I shouldn't be like looking forward to like 10 years. 10 years, maybe that's what I'm going to be doing 1, 2, 3, 4, 5, 6.
Yeah.
So what I'm trying to allude to is that when banks are designing these products, so it's other loans and everything, I feel like the one main thing that they're selling is instant gratification. You want things now.
Yes.
You don't want to wait for 10 years. And wanting things now and having them happen now is okay. It goes hand in hand with my analogy of saying that every day should be like a day on vacation. You have no idea when you're going to die. And then also when you delay your happiness, you know that pain is not going to be delayed.
Yeah.
If you're meant to be sick or have cancer tomorrow at 3:15, you will have it. If you're meant to lose someone close to you in 1 year's time, go 1 past 1, it'll happen.
Yeah.
So when you delay your gratification, your pain is not going to be delayed. And when this pain, it's going to be so aggravated, more feeling like you're not doing anything with your life. Your life is all about pain because you don't have a balance of good things and bad things happening to you.
Yeah.
So now for me, this is why I'm for loans. Instant gratification is okay. There's nothing wrong with it. You have to be just clever about it. That's all. You just have to keep a balance of you have to be financially literate enough to know just because I for a 700 loan makes out there get that 700 to I think the banks allow you to like a 4K I was like a 4K hell and then I will trouble hella hella emergency now you have to be borrowing money around
But now you're driving to my point. Yes. My point is, given I read a source Botswana says something about the debt is about 68 billion, right? And with that, 70% of it relates mostly to like personal loans, right? Like it's not secured loans, right? And Africa-wise, believe it or not, Botswana is top 3
Yes, yes.
in terms of being in debt, right? Not the government, no,
Okay.
individuals, right? So it drives my and individuals. And now when you look at it, now I got some time to actually think about it. I was like, okay, if it's Botswana now, we're in that top, right? And the government being the highest employer in Botswana, right? Does that not send a red flag around like our government employees, right? In what sense? That they have better security, right, in terms of getting loans from the bank, and bankers is really they think that because most of them are that permanent, right? So bankers are easy to get. It's easy for them to get loan, but they do max it out. I've seen the pay slip, dog, that I posted on social media where someone is earning, let's say 8,000, right, and then that net is 500. As much as you're not delaying your gratification, right? But what's that, the loan, and then it takes all your money, and then you're left with 500. Tell me about the pay. You are going to now, for that short period, right? For that short period when you got that car, you'll be happy, right? I think when it comes to purchasing things, that gratification, it comes shortly, and then you're like, eh. I've experienced this so many times. I'll get something that I really wanted, and then when the time comes, I'll be happy though 1 day, 2 days, and I'm like, hey, that's fine. Right. Now imagine somebody who got that car, they're happier, right, at that moment. And then for the rest of the next 2-3 years, payslip bit like empty. How is that not pain? How is that not prolonged pain? Right?
Well, yeah. Kind of the problem is if you wanted that car for a temporary feeling, and as much as yes, I don't know. There's something that you need. Yes, it's gonna give you gratification, but you can use it like for a prolonged amount of time. Let's say, for example, you want to be into farming or something like that.
Yeah.
If you buy a car, you can go to the farm for over a period of like, I don't know, 6 years or whatever. So you can be still using that car this year, next year, and then in 6 years' time.
Yeah.
But then if you're now financing someone say a holiday, how about there's nothing you can do again with that thing.
Yes.
So I feel like with a car it's different. I don't think if you have unless it's just for wow, I have a car. So I don't know.
No, I agree. Obviously, it'll be your day to day. You assume it's your day to day. You use it to go to homework, parties, whatever you're doing, right? Whatever your life routine is, right? Obviously, you're using it every day. Fine, it fulfills that purpose. But the gratification that came with the car, fade away. Fade away. The first few days, wait, too man. Like I had a friend / colleague. He was so happy when he bought his first car. And he actually almost slept on it. In it, sorry. He almost slept inside the car, right? But my point is, one of that very same day when the car landed, super excited. But as time goes on, you're like, eh. Now, imagine, I'm only happy for 2 weeks. And 3 years old, all stressed.
But that's a different thing because I feel like when I bought a car, I was happy that I got a car. But even up to now, it's an old car, but I still appreciate it.
Yes.
So that's why it gets back to my point that if you're buying something saying it's functional, you might not be happy every single day. Even in relationships, the first few months are honeymoon phases. You're not going to be happy like that for the next 10 years. Even the day you're getting married, you're not as excited about that person the way you were in the first month. But if that person is functional, not abusing you, has liability to you, then it's okay to have that person around, right? So the same applies with a car. If it's something functional, if you're buying something, say, some sort of utilities, giving you something, yana.
Yep.
There's nothing wrong with that. So, like if you like, in as much as yes, loans are better if you're not very intelligent about them. If you're financing something functional, say you're going to be using, it makes sense to buy one.
Yeah.
I wish I had points for this because if you look at my argument is not structured properly.
Now I'm just
So I'm
winning.
just thinking from the top of my head.
Yeah.
So yeah, no, if you look at if you're gonna be financing something functional, say long was a clock, how go reka ploto boaga, wa check a young ploto le babereki, wa not some yango. And that's even if
Yeah.
you bought a plot. But anyway, this still speaks to loans.
Yeah.
Right?
Yeah, it does.
But let's say okay, you're not taking a loan, what are you doing?
If
If such a loan, what are you doing? You're saving for what? What are you doing with your money?
Okay, I mean, obviously, if you don't take loans, one, you could be saving. I get. Two, you could be using. Some employers give you pension after like every other contract, or gratuities, whatever line you are in, whatever incentives that you can get to do will generate the line cash. That's like literally how you be sort of surviving until that specific moment where now you have leverage enough to go and get a loan, right?
Okay.
So the argument is people will rush to get one, just chasing the fact that they'll be in a better state then, but forgetting about longevity.
Okay. So now here's my thing.
Yeah.
Right. I still wish I had written my points down properly. So number one, I spoke about instant gratification. There's nothing wrong with instant gratification because you don't know for how long you're going to be alive for.
Yeah.
So, and then number two, if you like, getting a car is okay for as long as you don't exhaust all your funds to the point that how I demand my idea, how an emergency I demand my all the time.
Yeah.
So, for example, if you have, let's say, I don't know, for argument's sake, let's say 2.5x's, like after paying for all of your expenses, it's okay to save 1.5 and then maybe get a small loan, 1,000 and get a car and be able to drive around, right? Because you're also leaving, you're able to attend things, you're able to, it's very expensive. How I like being all the time you stop and then it's very inconveniencing. It's okay to allocate that 1.5 to something else, saving and everything, and then 1,000 to your loan. Right? You are right, a person has to be financially literate enough to be able to make such a decision. Right? And then also I feel like number two, I don't know, is it number two or what? Another thing is that also if a lot of businesses deny loan and they're not always saying that there is our savings, let's use our retained earnings to finance projects, then why is that? What it means is that the only problem with loans is that people usually take loans to finance consumption. The problem is financing consumption. And as much as you want instant gratification, it should be clever. There's no you're getting your loan to go on a trip. That doesn't make sense. If anything, you should follow like the mission concept. If I'm going to be getting a small loan, and this trip is like for 1 week, then I should be able to pay off this thing at the next pay days.
Yes.
You know, it's not going to prolong up until like the next 12 months or for 5 years, still paying off that thing that I was happy for like 5 minutes or whatever. And then also, another thing, let's say you're not financing consumption, right? Let's say you're home. Okay. Right.
Yeah.
I lost my train of thought.
Yeah, no, I get you. But consumption-wise, right? I hear you solidly, right? Consumption-wise, now it just trickles down to housing, right? Like jumping into acquiring a property, right? For your own, for you to stay there, right? So it is consumption.
Wait. Actually, this is the point that I wanted to make because of my train of thought.
It is consumption.
In terms of mortgages, the other time I was having a chat with a friend. I reckon if you get a loan, you have 30 years, and then it's like a 500,000 loan. It's like a little 2 beds and everything. But if you're paying 4,000 every month on a loan, I get you're living in that house as consumption. But either way, you're paying rent. Let's say loan, your loan's at the end of 4 point something. Let's say you're paying rent. I get.
Yeah.
Either way, you're do rent until also. So what's wrong with getting a house and then paying that 4.5 or 4,000 and just living in that house? At least they like how when you pass away, maybe your life cover will pay off the debt and then your kids have a home. Yeah, rent though is also hell like I was saying. Spend your whole life paying rent and now also hell like I was saying, and then what?
I mean, like you.
So consumption, there's supposed to be some sort of a balance. You're paying rent, but at the same time, you don't want to get a loan of the same equivalent amount. So what's the point?
I mean, I do understand you, but nowadays I'm an avid reader, newspapers, right? Every day when I open a newspaper, I see minimum of 5 houses auctioned. 5 minimum. And Gibwa with different Ubula, Sunday, Ubula, Petrol, Ubula, but all of them are like across, right? So what does it say? It literally says that we rush for certain things because now we want to get life status. What I know, I'm 30, I have a house, I have a car, I have my shit together, right? Yes,
True.
yeah. So how when we do that, we sometimes forgo reasoning and logic to a point now. A couple of years later, and also it constrains you. Like, let's say we want to shift your career. Let's say we want to say me and you are just like, we're quitting our jobs and we're pursuing this podcast full or nothing, right?
Okay.
We're just hoping it monetizes and it makes money, right? And at that time, you already have 2-3 loans that are running concurrently. That will be a deterring factor. You won't be able to do it because you already have these obligations. So they sort of constrain you in such a way that you won't be able to chase other paths in life, right?
So let's say I got a loan, I'm paying 4.5 Gumudipan, right?
Yeah.
It's a 30-year loan,
Yeah.
right? And then you don't have a loan and we want to quit our jobs. The assumption there is that you're no longer going to be paying your rent. What is the assumption there?
The assumption is one, I can downgrade.
Okay.
I can move to a one room if like the vision is clear. I can move to, let's say I move to a one room. You do 1,000 now.
Okay.
When are you still stuck with that 4,000?
But here's the thing. Can I not rent it out and then downgrade my life?
Yeah, fair enough. You can. Actually.
Right.
Yes, you can.
So one is comparable. The only problem is if I got a loan, I bought a house, I don't even live there, but I'm here paying rent with you. Gotta have that rental expense. My 4.5, but at the same time, I'm paying a mortgage on. What is that house gonna do? Even the rent, thing. You're probably waiting for like government employees or something, hoping they'll rent out your house. And yeah, 1.5 because of the location.
Yeah.
Right? So a very big factor in determining if you want to get a loan. Okay, if because obviously a lot of us that are getting loans were employed.
Yeah.
Our only form of security, kind of the way we're gonna save is this loan, get through our employment money.
Yeah.
So if something was to go wrong, what's gonna happen to me? What's gonna happen to this installment there? Like, how am I gonna finance everything? Because the only problem with a house, at least you can rent it out and everything. But with a car, it's highly unlikely to cover a loan there and there because a car depreciates at a faster rate, but loan and it's systematically spread out over the period,
yeah.
72 months or something like that.
Yeah.
So even with cars, you have to be very, very strategic when getting a loan for a car. A car is important, don't get me wrong.
Yeah, very.
A car is important. It makes you feel better about yourself. Even you're pursuing business like that, there's a way you feel when you're getting off your car. You know this.
I know. I know that.
Also, even the people that you're approaching, they're highly likely to trust you if you're driving an okay car. Trust me.
No, yo.
These are unwritten rules that no one is going to tell you.
Very valid. Like, you drive a certain car, they look at you, they're like, I want to believe even in an interview, you go there, right? You go to an interview, looking good, blah, blah, blah. I know we'll be bumping to the HR parking lot thing. Oh, no, good. That probably even gonna lowball you because of that.
You're right.
Yeah,
There's a bit of something that comes with it.
No, they will probably think even the amount that you want, you're probably not at that level, not that value. What do they really attach like that appearance to your value already? But just hell up by just, hey, first appearance. Yes, that's very valid. They will do that.
They will do that. So if you look at and as much as you want to downgrade and pursue things, you still need like an okay car. Also, you need a reliable car.
Yeah.
Honestly speaking, the cars we're driving right now, they're good cars. They can carry us from one point to point B. But shit can just hit the fan. Hell, I be a computer box, and that's that on that.
Yes.
When you have a car and a motor plan is probably under warranty as well, you can go back to the dealer and say there's something wrong with this car.
Yeah.
Well, so you have a reliable car, you're able to pursue other things like and you can also pursue business because you have a proper car. It's decent enough.
Yeah.
Well, so I feel like there's nothing wrong with financing a car, financing a house. But just like I'm saying, you need to be clever about it. And then one thing about finance also, and as much as you want to finance functional things, also, the only way to break out of employment is not just through maybe, it can happen, yes, an idea and it booms, and then you can exit the employment world. But most of the time, you still need a bit of like money from the bank to start up that thing.
Yeah.
That's why there's always a startup capital type of thing. That's why it's a thing.
Yeah.
That's why all the angel investors, that's why it's because they know that people that are starting out, they need money.
Yes.
So the easiest way to get a lump sum is to get it from a bank while you're working because you have a paycheck guarantee.
Yeah.
When a bank sees you're working, they're more likely to give you a loan than when you just go out and like similar business.
Yeah.
So as you're working, you can also, you finance your kanya and then a portion of it later hits your loan. But let me get this lump sum. Let me go start up my thing, right?
Yeah.
And then that way, a common one you can have multi-res. And then also with financing multi-res, I know I'm going to be dragging you to my side of the point.
Yes.
I don't know how I feel about building a multi-res, and then the money you're getting from the multi-res does not exceed your loan installment. Are you really building something there? Does it make sense? It's just about status.
Well, okay. To defend it, I wish I should. I'm looking at it from perspective. If you start it now, right? You're not really looking into. You're not delayed gratification, a multi-res in that sense, especially when you financed it with a loan, right? As for the multi-res, right? I think now the whole thing around it is delayed gratification. In what sense? That you know that after a certain period, you would have paid that loan off, and then it's forever reaping the benefits. That's most of the people. That's how people think. That's what I realized. That's how a lot of people think when they get in those multi-res. That is another reason why rental now in Gaborone goes up, really up, right? One, because we're financing them with loans, right? And when we finance them with loans, we try to match what we're paying to the bank with what we're receiving from the tenants. Even if it's a subpar, below standard apartment, they're trying to match that amount that they're getting paid from the bank, or want to have like some sort of surplus, right? So that is another downside, I think. Now, when you fully get it from that side, you spike up rental for no reason.
But that's also, I think, if it's going to be good debt, and as much as, yes, for me, good debt is also financing a functional thing.
Yeah.
If you're getting a loan for a multi-res, then it should give you a surplus. It should be so smart. It leaves you with a surplus. You see how you're building something. If I'm to leave a job and I'm out of a job, this thing can pay itself and also pay me somewhat, some way.
To sustain yourself.
To sustain myself. Not even sustain, just a bit of money. I'm building something.
Yeah.
If you like you have not built anything, if it's still eating from you, like after now multi-res or 8,000, but your installment go banking is 12.
Yeah.
So now it's taking 4K from you. It's still a liability.
Yeah.
But then also, when I conclude this point, you can also finance value-adding things that help you build wealth to the point that you can now exit the employment field. I don't think we want to work forever.
Yeah.
Yes, some want to work forever. But then when I think about it...
Who wants to work forever?
Well, there are people that want to work forever. I can't say... Okay, I'm not saying I get the white wrong.
But there are people who just...
content. They don't have a problem.
But I realize that there are people who just say...
This is life. There are people that appreciate having a defined structure over their life. Or this is what I'm doing on Monday, Tuesday, Wednesday, Thursday, Friday. If you don't give them that, they'll be so lost. They define themselves katiro. Yes, I'm a finance manager.
And obviously they attach that value in life with
wearing a suit to work.
Yes, I know.
So there are people like that.
Yeah.
So I feel like there are people that love working. They want to do this till they're 65 up until they're like CEO and stuff like that. So for me, I don't think that's a thing for me. So when I'm taking a loan, I should be building something that's going to be taking me out of that life.
Yeah.
But then also, if you don't take your loan, how else are you going to build wealth? So tell me right now, the other day we had a conversation with Mr. Alote. The average earnings, some of us are less than 10K.
Yeah.
So tell me what you can build that's going to help you leave the employment world. Let's say you owe 10K. So let's say right now, it's you also, you get in 10K, probably after tax is 9.5. Again, you live in gaps. So tell me, you don't want to get a loan for anything.
Yeah. Okay.
How are you going to build wealth? We're looking at good debt right now. We're arguing good debt,
we're
how you can
looking at
build
good debt.
something.
Okay.
Loan. So
One, that amount, obviously, I think, Hansalo, it already comes with limitations. Financing, right? Unless you went for like grants and government schemes, right? Because in terms of like getting loans from commercial banks, right? Those that are enough to really build wealth of a significant level, it can be really limiting. It can be really limiting if you look at it from that perspective. If I'm to say, unless I wanna, let's say housing, let's take the one, sticking to the multi-res thing, right? 10, take home 9.5, right? How am I gonna afford a multi-res?
all right. So first of all, one room, you can make a string of one rooms.
Okay.
Right?
Yeah.
That person affords a loan, 100K, somewhat share of 100K. Khoraba plot or maybe in a rural area.
Yeah.
Kumahala and then build a string of the one room.
Yeah.
You're able to afford that.
Yeah.
I get it. And then you can make something selling it's more than that installment and then build some sort of extra income.
Yeah.
So if you don't take a loan, what are you gonna do? Let's say you're like a 3K, not allocated to any type of expense. So 3K, build wealth. Let's go.
3K build wealth. One.
Remember after 12 months, you get 36,000.
Yes.
Okay.
One. Start with the little business that requires less capital.
Give an example. I gave Martinez.
Probably start with a mini tech shop, right?
Okay.
A mini tech shop, knowing that you can finance it with that 3,000, right? And you can finance it with 3,000, and for 3-4 months, subsequent months, you can just be like doing like a top up just for the cash flow purposes, right? And then after that, now you have established a passive income, right? Now try to scale it. When you scale that mini business, now you have about 3 parallel incomes, right? When you have 3 parallel incomes, you tell me in 5 years, exactly. My argument is, right? We sometimes, as much as we can achieve good debt, right? Sometimes we don't crunch the numbers enough to understand what good debt is, right? To a point now, we are lost in the whole realm of multi-res because everyone is doing it. You're like, I want to get a multi-res too, right? And in the event that you get a multi-res, remember we had a conversation, right? And I'm like, you try to get a multi-res or standardized to what other people, you don't know what other people are financing it with and how they're financing and the type of jobs, whatever. Even if you have like a really big salary that you can afford to pay the bank consistently, sometimes that multi-res won't be able to give you enough coronel surplus, right? So when I leave that confusion, I don't know, as long as I'm investing in what do they call it? Yeah, real estate. I could have been told what real estate is the way. Sometimes we invest in real estate and we don't crunch the numbers enough to a point where we're just there in the debt and we're just sucked in to a point where we have to sell it to pay the bank, and then all those years of paying, you're left for 20 years, you had already paid 10 or 15 or whatever, depending on the duration, right? You had already paid half of it or half the duration period. And bank, you can't pay it, you're sucked in, you end up having to sell to pay them. Or even worse now, the bank, it's high, and then they auction it and sell it for whatever amount they want.
Yeah, I agree with you there. But let's go with your point on how you build tuck shops.
Yeah.
I want to be honest with you. A lot of people that are saving, right?
Yeah.
You haven't bought a car, you haven't bought a house. If you're going by that analogy right now, you should be having like around 100,000 plus.
Yes.
Your savings account, we're supposed to be finding like 100,000 plus. So the reason why I'm for loans, or you're trying to build wealth, gather loans, is because it's rarely ever the case that when you're saving, got a house or a loan, you don't have a choice. You will pay it off month to month.
Yeah.
You will do what you said you would do.
Yeah.
Or when with saving, it's just free flowing. Koro khona go save ibile re no o le botla save 300 lo change lo mo 1.5.
I'm 500 for a tough month. I deserved a break.
That time ibile ha uzuro rekileng. Like you have no idea where you borrowed the money.
Yeah.
You know you have been like you went to a different job, you get like a 5k extra. You have no idea what 5k no mo dirisa eng. Like for the 12 months what thing, you did nothing. We regular the biscuits like and I'm telling you, there's nothing tangible that you have.
Yeah.
So a loan commits you in such a way that there's no reverse. If you say you're gonna build a multi-res, it's there.
Yeah.
So in that sense, it helps you commit to things. If you're trying to, even if the debt thing, you're trying to make it good and create a surplus, but you have something tangible to show for it. I was working, I did this. A lot of people that are saving, that you cannot doing anything.
Yes.
A lot of us who are not driving good cars, that's next installment, that's 7K on our pay slips.
Yeah.
We don't have those 7K, cumulative 7Ks. More savings accountants are on.
Yeah, per month.
With hello or how na savings, see, me happy will have na kono.
Yeah.
That's all that you
Modi franchise in Saka, bro. Yeah.
What like a breakfast to go through, but now buying coffee, you're eating lunch, how chase on a getting chicken strips. You get what I mean?
Yeah.
And I do tell you 70 cumulatively it's gonna be like a lot of money in a month.
Yeah.
But when I look already, maybe we'll feel like I'm broke, I can't afford to maybe be eating breakfast outside of the house. But I like eat oats and then I pack my lunchbox and in the evening I'm eating at home.
Yeah.
When I'm a day, I go hell out for jam fresh, masai pay chicken strips on your way home. How some gym where I need a bit of protein in or like a steak.
Yes.
Because when I like cash flow more pays like in your bank account,
Yes.
you're not doing anything. So what do you say to that?
Okay, I agree with you, right? Like whenever I have surplus, right? Feel like I just be making random choices and random decisions. I'm like, why did I just buy this thing, right? And a loan could like help you structure your finances in that sense, right? But the problem is, it's overwhelming where now you get to an extent where you can't. You want to finance something, or there's an emergency. You know, people take loans. We cover funerals. We have black text, right? We have to take care of people at home, blah blah blah, right? So when that emergency comes and you take a loan, right? Yeah, but you'll probably take like for motel or something, like small amounts, right? And then those small amounts, they pile up until now you're really overwhelmed. And guess what happens? In now, we have companies, really financial institutions. They'll just tell you, we will pay off your loans, right? And then we just have to, you have to come to us, right? But no, we'll clear your loans. The word is clear. Yes. They just say they'll clear your loans. And in your mind, you're like, hey, clear my loans. No. They're just saying that transferring you from all these other companies, all these other businesses, they don't want you to be that client. Just come here to be with us. And we're going to have you as our slave for the next, 5 years. Yes. So as much as the downside to it, right? All in all is managing it and being more sensitized to it, to how to really manage yourself and know where to say, I think that's where now we can see this should be our borderline, like our agreement point, right?
Yeah, I think that should be our agreement point. You should be very smart about it, because in as much as I'm for loans and I believe in love, I don't know how I feel about getting a loan to get married, like a 200,000 personal loan to get married.
Exactly my point, right? I would have splashed Puti at the village. Big tent. I'm not poor. Big tent. Everyone is happy. It's nice, right? And then for the next 5 years, our marriage is going to be in problems. Why? Because we're paying off the loan, right? Probably I took 100, you took 100, and I probably took more because I'm paying low ball as well, right? So with that paired together, for the next 5 years, we're not really living comfortably because of 2 days.
Yeah, but if you want to play in a tante, it's
Imagine. Let me make up
That's the worst thing about weddings. What they happen in summer, you're not too sure what's gonna happen.
Imagine and you and for your and change. So that's the thing as well. We sometimes finance things. Financing luxury. That's our downfall when it comes to loans. Financing luxury and comfort that we don't need at that point. There is comfort here with Roka.
That's why it should be functional. After it has happened, you should have something tangible. It's almost like a DVD here. I don't know if they still put it on a DVD, kind of cassette.
I think we'll send all of you. But
you should have something like after 2 years to show for it. If it's a car, you still have a car. It's here. If you bought a house, at least the house is still here. It's functional.
Yes.
And then also, house na go loan, live like, go to Oscar max out, okay, no, they can only 6,000. So, loan, you think about this entire 6,000. You don't want a situation, you know what I mean?
Yeah.
Leave a small portion for just emergencies. Still, you still have to save for like emergencies. If you're having like, you want to invest in something, pyramid scheme and something
exactly
able to invest in that.
Did you know a story about like I think the person was in health, right? Health worker. She took out a loan. I think into one of these pyramid schemes. The one that crashed bad and people were not getting their money back. A loan. That's the thing. She took a loan. She thought it will double, right? The problem is the other knowledge we might think this is good debt. We're not even sure what good debt is. Maybe we should like take time, try to learn what good debt is, have logic and steps, reasoning before we really attempt to say, oh no, this is good debt.
And also, I feel like it's so hard to define good debt because you know why? When I explained it, I was talking about real estate. That one is much easier. But then there are times where you have an idea. You're not sure if that thing is going to catch.
Yeah.
When you're 100,000, you're trying it out. That one is crazy. You don't do such a thing.
Yeah.
You know what it goes back to? There's an episode where you talked about the Dandu model, business model.
Yeah.
It's either you win or you lose small. You know what I mean?
Yeah.
So in losing small, that's where you finance a very small portion of that business idea.
Yeah.
How is that 100,000? 10,000. That is not good debt. That is not a good investment opportunity for you. The only air shapuke loan probably is just 20K.
Okay.
You're losing small. Even that loan, you're probably gonna finish it in 2 years' time or 1 year's time. And then also, how is that like a huge loan or finance is just one idea? This thing you're rolling the dice. You're not sure if it's gonna catch.
Yeah.
Something can make sense in your head, but the market is gonna like it. So when you're rolling the dice, you have to roll it many times to get a 6. There's so many chances of you getting a 1 3 times. So in how's that 100,000? Time. So you have to keep trying over and over again. So it goes back to the Dandu business model, not business model. I don't know what it's called. Dandu analogy.
Yeah.
It's either you're winning or you're losing small. It's not a win-lose situation. You're 50-50.
Yeah.
So what I mean, I invest in something. Like when we tried investing in that whole thing that didn't work out.
I think we should revisit our idea.
I
can feel 2026 as my year.
We're hoping to make like hundreds of thousands from investing 3,000.
I think it was crazy how we thought we were gonna be millionaires of 3,000. That was crazy. but here we are.
We could have even invested 15,000.
Hear me out. But this is now the downside to it, right? The fact that we felt like we lost minimum, right? It can now mindset wise. If I'm putting my everything into something, right? I have to fight until the very end.
Dude, we fought.
No. But we stopped at some point. Why? Because we felt like even the capital wise, it was like, yeah. And then we just sort of like phased out of it, right? But if we had put like, it's a loan, what's our loan, the next season. At this point, we'll be really fighting it till the very last day. But we sort of stopped because of that. So, so sometimes when you max out, you might think it's good debt. You might think,
Maxing out. Take it from me. If you're mixing out, it's not good debt. If you're mixing out, what's the number or finance a business, just know that is bad debt already. Business, you're not always sure. You're rolling the dice. You can't say it's good debt.
Yes.
Yeah, so,
I get what the idea is. You're thinking risk returns, right? Mm-hmm. And you're looking at life like, when I'm this certain age, I want to have accomplished 1, 2, 3, right? So Tabore, let me step on the gas and accelerate so that I can reach that point real quick. So but I'll maximize my returns. So risk taking that loan, and I'm putting all in, and my that's why I'm getting it back to that. So when you do that, just know that it's not good debt. Analyze it, run the numbers prior, try to make sense of it, and try to put in different factors and variables. Or if this happens, what happens? If this happens, will I be able to sustain this? If this happens, then you will be able now to say, okay, this is good debt.
Good debt. And I agree.
So a little bit lyrics debt, poor debt, and then that's what changed everybody's mindset.
But also, Obana, I like your point here. You should look at risk and then it should go hand in hand with the return again.
Yeah.
So, Obana, how do you work a multi-res? I read somewhere, maybe I was embarrassed that I'm into accounting and finance and I didn't know this. So there's the difference between risk and uncertainty. When you talk about risk, you know the outcomes and the probability of those outcomes.
Yes.
And then uncertainty, there's just multiple outcomes. Even how it is, the probability of those outcomes, how it is.
That's just a normal business idea. That's uncertainty.
It's uncertainty.
Yeah.
When you talk about the multi-res, more risk.
Yeah.
So when you're mixing out, we'll be in a multi-res. But then also it's never a good idea to mix out. I'm still going to reiterate on this point. You can't mix out on anything.
Yeah.
And then, how holding uncertainty like there's no proven track record of this thing working.
Yeah.
That's where you cannot max out. You're not sure of the outcomes. You're not sure of the return. You don't know anything. You're just trying out something that makes sense. With the TV. So when you're financing such a thing where there's uncertainty, you cannot max out.
Yeah.
A lot of us have good ideas. Waka sama mara nkela go tsama thoro kona le business e fe ka berekang. O ta go bolela gore madi ga yo go sida mele ene di ideas go di blind.
And the funny thing is when they actually approach Sida like, do you think this will work? Yeah.
Exactly. Ideas are blind. We think this thing will pop. 100,000 or something like that.
Yeah.
So for me, good debt tota, you're not mixing out.
And
Right.
it's a risk. It's a calculated risk.
It's a calculated risk.
Yeah.
And then you're spending very minimal.
And also, when it comes to now from your income, let's take it back to an employee. It shouldn't be more than 40% of your deductions.
40% is a lot.
It shouldn't be, because if it takes about 50%, you are really suffering now, right? Because if of your net, if it takes 50% or 45, what are you left with 55 to sustain yourself, your family, whoever you have to support, right? Now that's when it comes in. You cannot afford this thing.
You want to know the funny thing about life, though?
No.
The whole of Gab's rotate is like a 5,000.
No,
I don't know how this works, but
I did a breakdown to my friends the other day. They told me that we're arguing about 50,000 pula, right? Gross. I told them 50,000 pula gross is nice on paper, right? Until now, I have commitments. I have a car, 7K, house, 8K. Let's say food, whatever. All that, 20K, right? Oh, by the way,
the food 20K. Yeah,
no,
food,
but no, food topping up on like 8 and 7.
Oh, okay.
Food and utilities, right? And then it sums up to 20K. And then I didn't even take, I think, tax. Probably tax at 50 is around how much?
Let's say 25%.
So
it's around like 10K.
Let's say 10,
12,
right? So I'm left with 20. It's so-called. And then in that 20, I have to deduct the policies and what insurance for that car.
And insurance like is very expensive.
Fuel as well for that car.
And it's very expensive as well.
So I ran the whole 10. Let's say I'm going to run the whole 10 with that, right? Body policy, everything, just that within that 10K. And then I'm left for 10, right? I assume you want to invest, you want to save, probably you have a kid, you want to school fees.
And after school fees, it's like a 4.
Oh, so it's like a 4, right?
Yes.
So it's like a 4, what disposable income? How does that mean what 50 hours? What like that?
That is the thing. It even shows a lot of us, we have, you know how
Yeah.
most of us.
Yeah.
When you earn, the higher you earn, the more you finance consumption. You're not financing anything that's building, that's taking you anywhere. A lot of us now, we're working for loans. Bad debt is now where you end up in a loop of loans. You're not just working for loans over and over again. When a good debt, you see, okay, I'm financing something, say, now when I'm working because I have a choice to. You were working because you just want to work.
Yeah.
You have a choice to not work.
Yeah.
And you took bad debt.
And looking
you have
at
a
the
problem.
economic state, right? In the event that your company cannot longer have you because they're experiencing economic pressures, if they let go, you're gonna be left for 4K. If they let go right there, how are you going to maintain all of that?
And that's the thing.
So
that's how you know it's bad debt.
That's what I was trying to say. Like, really live cautiously. Or not say forgo that you should forgo your life. Obviously, the qualities, comfort, it should be, because we're not here for a long time, right? But if you go in too deep, then you might swim with the sharks.
Exactly. How so bad 100% your finance consumption your whole life.
Yeah.
That is where the problem is. Yeah, no.
I had a cool
time.
pan. Swim with the sharks. As in loan sharks. Anyway, continue. Yeah.
So, but anyway, I feel like after 40, you might as well just get the loans here, because now you are 40, you need a house, you need stability. It's okay to finance loans. That's fine.
Yes.
But then, if you're still in your 30s, late 20s, I feel like you can't just be maxing out on loans. You're buying a car and then I wake up and you're land we pay it. Because a lot of times you feel like a symbol of that you're doing well. You've bought a car, you've bought a house. You know, you've bought a house and that house is so huge, your mortgage is so huge, it's taking a huge portion of your income.
Yeah.
You know what I mean? Koro zero loan hela ilong gore it's about 18,000. The koro it lo simola go amogela 30 hela gore loan ya 13,000. Kolo ya 7.6. Even 7.6 is little.
Yeah.
Probably close to 10.
Yeah.
Even now you are living day to day hela ya no finance school fees highly that one is very bad debt.
No, but then again, now think of it from a different perspective. What if that person approached it with the mindset that if I start the house now, it'll 20K, right? By the time I turn 40, because it's a owner, it's certainly in the bank's name. It's certainly attached to the bank.
Well, the thing, truly. But I also feel like by the time you're 40, you're flatlined in your mind. You're now looking for another loan. And now your only business that you've built is that house. Usually, it's like a flat. You're in a flat that
apartment.
Thing. Yeah. And then when you turn 40, now it's your investment property.
Yeah.
And then you build like your home at 40. At that time, you're flatlined. You're no longer thinking, about finance, a business kind of thing. The only loan you're getting after that, mortgage, 15K, a huge house in like G North or something like that.
Yeah.
You can no longer finance things that are going to get you out of employment.
Yeah, and at that point, usually when you reach a certain age, I think even your mindset, you just reach, you sort of settle. And then, then it's really common. It's a thing. It's human nature. You're comfortable. Your brain tells you, it's okay. You tried.
Well, when? So imagine now that property or what and then how 40 you are comfortable, you're buying a big house. When have you built wealth? Even at that time, about a Land Cruiser, how is a big house and a Land Cruiser? Well, when?
Yeah.
So it's okay to buy that apartment if it's leaving you with access to try out things.
Other avenues, yeah.
Other avenues that allow you to build some sort of wealth.
Yeah.
Well, when? Maybe let's say a house it's equivalent to your rental 4K. You can still travel from there to here. You're not mixing out on everything because you're trying to prove a point to people or you're doing well.
Yeah.
You also have a car loan. How I mix it out about that, I don't know, D4D.
At that time, nice,
it is nice, but it doesn't make sense if it's gonna be like taking like a huge portion of your income. Now you cannot try out anything in your life. I feel like good debt is the type that allows you to exit financial freedom. I feel like it's the freedom to be able to make your own decisions outside of your employer. You can decide what you want to be. I don't know how to explain it. There's like a definition, but
basically it allows you. It's a gateway to financial freedom.
It's a gateway to financial freedom.
Yeah.
So if you feel like financial freedom, bad debt close to financial freedom. It actually keeps you in the loop. After that's what I'm financing this car loan. You are very excited because you can now qualify for a new loan to do something else.
Yeah.
So now for me, that's how I feel. A loan is okay for as long as it's giving you an adequate amount of gratification, because you're not going to defer pain. It can and it will happen to you.
Yeah.
But when every dog gets its day, we're all going to have bad days. And unfortunately, when it comes to bad days, they come to you. Happiness, you have to go out there looking for it. Happiness, like happiness, no. Happiness, you got there searching for it. But pain will happen to you. So instant gratification should be a thing, but do not mix it out. And then also, when you get a loan, it allows you to commit a certain percentage towards building something. When you have like, my dear man, you live like motona cash flow ends. Moto committing a certain percentage of money to a loan, they downgrade their life automatically.
But before I conclude, let me drive you like a little detour. Okay. So this is what I realized about our Indian folks who stay in Botswana, right?
Okay.
What they do is, you don't see them driving luxurious cars. They will live in comfortable homes, yes, right? And most of them are paid by their companies, right? What I'm trying to drive to that is what they had pushed with their cash flows is they were pushing into building first with their cash flows. And then once they have established their businesses, their companies, then they use their companies that have been running to now finance their lifestyle. That's how most of them are living. Like that, if you look, most of them are living that way because now they're buying cars through the companies, buying property through companies, their companies. They didn't have to go to a financial institution to get funding by as individuals. No, they're just funding. And in the event that they can't pay the company, it's limited to the company, right? It's not up high. It's not personal, right? It's just limited by the company. That's just another thing that.
But that happens because Indians like each other. That's not gonna happen to a Mozana and another Mozana company. It's not gonna happen
no. I'm talking about you as the owner, not like you covering for other. No,
oh,
like
I thought
you as the owner, because I guess that's what they strive. I think more, if not all of them, they strive for that, like for ownership of businesses and companies, right? That's what they strive for. And once they establish that, that's when now they push for comfort, more and more comfort. They are big on delayed gratification. So this is.
But I've never seen the suffering ones. Why is it? When do they delay it? I've never seen a suffering Indian.
They don't suffer. They just delay it. You know what? In what sense? Instead of getting a Nike sneaker, they don't get a Nike sneaker. They go to a store, any store that sells generic sneakers. They get that.
Why do you have such a detailed explanation? It's like you're an Indian or something.
I actually have a friend who is, okay. Right? I think he's going to be listening to this part. And that's what I love about him. I love about like the whole community and culture. Like I've been observing it for a while. I'm just wondering how I want to tap into that so that like now how my like I really, really, really value that about them. They don't. They really push delayed gratification to that point.
But then you know what my issue is? A lot of people that come from India, they usually when they come here, a lot of times, let's say I set up an insurance company.
Yeah.
All the other Indian companies are going to insure at my insurance company.
Yes,
You know what I mean? So they're more likely to be successful when it comes to business. Because they're building the entire value system. They're going to be buying from each other and everyone eats.
Yeah, I understand that. Let's go. No,
delay and delay. It's all a podcast that I want to
No, but the idea is
Coca-Cola. Why?
no, but the idea, hella, what I'm trying to push is they decided they're gonna take their funds towards building first, and then it will come back to them in a way, right? So maybe let's just summarize on what we're going to how you can like deal with your debt. One, it was your don't max out, right? Don't max out, and when you take a risk, should be really calculated. Crunch on the numbers, make sure that it makes sense. Even if it's just in your head, get somebody else to help you through with the numbers, right? Two, what else? What was the other one? 40%, right? It shouldn't, the 40% rule, like don't let it exceed 40% of your net, right? Because if you do, you're going to be struggling.
True.
Yeah, you're going to be struggling. And as much as people do, but try to reduce it to like
to a
low percentage where it's slightly manageable, right? And then 3, if you can, delay gratification.
Don't.
If you can, right? In the event that there are people who are generally frugal, right? If you can be as frugal as possible, then do it. Then do it. If you can be the guy who's frugal, who packs their lunch, who does everything, be frugal as much as possible, and just take the route where you invest in your business. Probably all your money you push it towards your businesses or whatever, obviously in a diversified manner, and then in a couple of years they will feed you and they will ensure that you get a comfortable, the luxurious. Unless you were pro-employment, which is still fine, just save.
Yeah, that's fine. And then for me in closing, I would just like to say, okay, I agree with loans, just be good about it. And then also in our next episode, I'd like us to talk about people that are not taking loans, but they're saving and going through BIFM Invest. Okay, I shouldn't say the name.
Okay.
They're going through saving, got a unit trust, buying shares in companies.
Yeah.
I want us to talk about how that's going to build wealth for people, because a lot of times we don't want to do any business things outside of our employment.
Yeah.
We're hoping buying shares will make us rich some way, somehow.
Yeah.
It's a good thing, but I want us to talk about it in the next episode. For me, good debt. Don't go for bad debt. But also make yourself happy. You might die tomorrow. Live like you're on holiday. Live like you're on vacation. Bye.
All right. Bye.